So try it now. Go to ziprecruiter.com/free. Once again, that's ziprecruiter.com/free.
Meet your match on ZipRecruiter. Try it free.
Broadcasting from the Kanowski-Bresney Studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, it is. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled Building Your Emergency Financial Binder. And really, Mike, we're talking about, a set of documents that someone needs in the event that something really bad happens to them. And one of the questions that family members and friends always ask is, who should I call if that happens? And this binder should have that information in it.
Yeah, it's designed to be that one-stop shopping of, hey, what do I go for? Any number of different things that could happen, right? I mean, it could be an accident that lands me in the hospital. It could, unfortunately, be my passing. But you want a consolidated place where loved ones can go to try and find, hey, what are my first points of contact that I should make?
What are those points of contact that should make their way into this binder?
Well, I think importantly, tax preparation, estate planning, and financial advice are three of the big ones that I can think of off the top of my head. The problem is, who does that and how spread out it is varies dramatically person to person, right?
Sure.
If I have 5 different bank accounts for different things, that is going to be more complicated than if I have a single bank account at a single place and then an investment advisor that's overseeing all of the investments. But again, your results could vary.
Folks, the guide this month is titled Building Your Emergency Financial Binder, and it has all this information and more in it to make sure that you are leaving a comprehensive guide for what happens if you're going through an emergency. Way to get this guide? Call 800-393-4001, or you can also request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here. And as we finish up the week, we got stocks rallying yet again, making new all-time highs on the NASDAQ and S&P 500. That cute little Dow Jones Industrial Average, though, still about 1.8% off its all-time high. And the big reason is that this rally, at least the last 2 weeks, has been driven by one thing. And that is, Tucker, I wish I had had you pull up a little sound for me before the show. I should have talked to you about it.
All of Tucker's computers are completely burnt and smoky.
Oh, yeah,
right
you
now,
don't have any.
He has nothing.
Nothing.
He can do sound effects by...
Try me.
He's just like that guy from...
Can you get me Alec Baldwin in The Departed saying microprocessors?
Oh, I got to sift through all the F words through that clip. That's not going to happen now.
I know, but can you do it?
Sure, yeah.
Microprocessors.
We'll do it live, yeah.
So this is the deal, is if you take a look at the S&P 500 Semiconductor Index.
Can you just do your best Michael Winslow and just kind of do up those voice impressions? You know, the guy from Police Academy? All the funny voices.
Okay, sure.
Yeah.
In any case,
so
the Philadelphia Semiconductor Index has gone from 7,084 up to 9,489. So if you do the math on this, okay, what you end up with is a case where semiconductor stocks have rallied 34% since March 27th, which is a lot. And that has been the driver of this rebound more than anything else. Now, obviously, there's a ceasefire in there that has contributed. That's been part of this. But these started rallying even in advance of it. And they've been kind of the major thing driving this market to this point. What we have this morning is the Iranian... I forget who it was. There's so many different people involved. I think this was the leader of the parliament. Put out a tweet saying that the Strait of Hormuz is open for commercial vessels along, the pre-established path for the duration of the ceasefire. Not really anything different from what's been said previously by him, but markets are taking it and running with it.
Yeah, Foreign Minister Abbas Aragchi?
The foreign minister, okay. Aragchi is, so he's the foreign minister. Pereshkin is the president, and then you've got Galabaf is the leader of the parliament. So, and then you've got the supreme leader, the new guy, Khomeini 2.0?
Yep.
No, this is 3.0 now, isn't it?
You're asking the wrong guy.
Okay. In any case, so where we stand right now, markets are continuing to price in, as they have for the last week and a half. Hey, Hormuz remains closed. There are 12.5 million barrels a day that are not being produced by Gulf countries. But markets are saying that's fine because this is going to end. And specifically, probably end in the next 3 to 6 weeks.
Okay.
Ultimately, we're going to find out, are markets right or is the Strait of Hormuz right? Because you can't have a sustained rally if the Strait of Hormuz remains closed. I think that much is a fact, given just what we see and know about global energy stockpiles.
I'm also just wondering, Chuck, the Iranians are saying, hey, we are opening the strait and there will be a specific path ships can take to get in and out of it. One of the fears had been, unknown locations of underwater mines and the complexity involved in mine sweeping underwater and the ships involved in that. If ships do successfully navigate through the strait over the course of the next week during all these negotiations, and then they fall apart and Iran attempts to close it again, how successful or unsuccessful would they be, given that one of the big fears was, hey, what path can we take without getting hit by a bunch of mines? Obviously, you can still lay new mines, but it's a pretty closely watched area right now. So I do understand, I guess, why investors seem particularly positive right now. Obviously, all it takes is a couple, shoulder launched rockets to close it again. But you would think that if ships do navigate it over the course of the next few days, closing it again may be tremendously difficult for Iran.
Sure. And look, I've said all along, I have no idea how negotiations are going. Like I have no edge. I don't know anyone in the Trump administration. I don't know anyone in the Iranian government. This is just not, it's not something where I have any edge where I can be like, oh, here's what's actually happening. What I can tell you is what is going on, and to this point, there still has been no meaningful uptick in traffic through Hormuz.
Yep.
Despite that, markets are rallying, which is telling you that markets are saying, look through that and assume that Hormuz reopens in the near future. And if they do, again, we talked about this starting at the beginning of this week, where, hey, if you look at this from a valuation perspective, if you were comfortable buying stocks last year with the S&P 500 at 22 times forward earnings, to get there today, you got to get up to S&P 500 at 7,500, 7,600 based on today's forward earnings estimates. And so there still is room to run in this market if you were comfortable paying that multiple last year and think stocks should get the same multiple this year. You could even make a case, hey, because stocks are trading 7-8% off of that number right now, hey, stocks are pricing in that there is a chance things don't get there. And so that's some of the downside that is being priced in. Is it all of it? No. If you saw a resumption of hostilities or further escalation, don't get me wrong, things could get worse. But I've been saying all week, hey, if you think stocks are expensive just because they're at all-time highs, you're missing the uptick in earnings projections that has happened over the last 6 months. And so there is more upside in this market if you get a resolution here. This is also one of those situations, and I want to talk through just general thoughts on managing a market like this, because this is one of those where, quite honestly, you can have misgivings about what may or may not happen, but you still have to listen to the market.
Explain.
Personal view. I might think that there still are a bunch of hurdles that need to be overcome, but if you simply wait for those hurdles to be overcome before doing anything, if you're actually looking at this market from a trading and investing perspective, then you can get left behind by markets that move more rapidly than you're willing to take on risk. And you could be one of those people. I still remember these people from, back in 2011 where, again, this is going to seem like really quaint when I talk about this.
Double dip recession.
No, Mike.
Go higher.
The S&P 500 was at like 1,200. And I still remember people coming in that I was talking to that are like, it just feels like it's rallied so quickly. I just want to wait for that pullback back below 1,000 before I decide to get back in. And the fact is, not only have you never gotten there, but the S&P's at like 7,000 right now. Like, right. I still wonder at least once a year, like, are these people still just sitting outside the market waiting for that pullback? Because that's how things can go. Like, the rallies that are hated tend to be the ones that are the hardest to get back into, because you're waiting for that pullback, you're waiting for it, and it never comes. Like last summer, just as an example. And I'm not saying that you'll see the same thing that you saw last year. You might not. Like, again, this could all fall apart and the S&P falls 25% over the next 2 months. I have no clue. But I think it's reasonable right now, if you're a market participant, to understand that there is a path to the S&P getting into the high 7s, and there is a path to the S&P getting into the low 5s. What you have to weigh are the probabilities of each. And right now, the market is pricing in like a 90% probability of getting into the high 7s and maybe a 10% probability of it going to the low 5s.
Right.
If you disagree with that, that's the beauty of markets. Place your bets. Figure out how you want to express that and place your bets. So ultimately, this is where we stand right now. And we'll have to see how the next couple months play out, because this is very much a binary event. You're seeing the fuel shortages popping up in Asia. You're seeing sporadic things in Europe now. They will spread if you go, if this continues here. So let's see how things go, and let's take a quick break. And when we come back, let's talk a little bit about Netflix. They reported earnings yesterday. We'll discuss after this.
Market insight, retirement strategies, real talk about Wall Street and economic trends. All live every day on our YouTube channel. Go to youtube.com/The Financial Exchange Show. This is The Financial Exchange.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide, called Building Your Emergency Financial Binder, will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to leaving assets to your family, simplicity isn't always the best approach. Cushing & Dolan are experts in elder law, and their new guide is called How to Leave Assets to Beneficiaries. Adding children as joint owners on accounts or property doesn't guarantee you can avoid probate. It may create serious unintended consequences. In this guide, you'll learn why leaving assets to your children may not always be the best plan. The guide also explains how trusts can be used to stagger distributions over time, help protect assets from creditors or divorce, and ensure your family receives your inheritance in a way that makes sense for your personal situation. Call 866-848-5699 right now and ask for your free guide, How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local Heart Walk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
All right, so yesterday after the bell, Netflix reported earnings, and here's what I can tell you, is the S&P 500 is up, call it 1% today, and aside from the energy and utility sector, basically the only major red that I see on the board is Netflix, which is down 9.5% today. So, couple things. First, Reed Hastings, who is the co-founder of Netflix and the chairman of the board, he's going to be stepping down from the board after his term expires in June.
And some have written this as pretty surprising. His statements on the subject were pretty short, and it doesn't seem that anybody knew this was coming ahead of time. So I'll acknowledge that for a moment. I don't know that that's relevant to it, but it came as a surprise, seemingly.
Quite honestly, good for Reed. He's 65 years old.
Sure.
Go have a little bit of fun. He's worth like $7-8 billion. Go out and chill. Live your life. Now, you can make a case.
Netflix and chill.
He could Netflix and chill. Exactly.
Go,
Actually, he might be more of a... what is it called now? Is it HBO Max or is it HBO again?
I forget.
He could do whatever that thing is and chill.
Yeah.
So, here, I see so many CEOs that just... hang on until they're 80, and it's clear they can't do the job anymore. Or how many politicians do we see that they hang on, and it's clear they can't do the job anymore? Good for you, get out, don't leave your legacy as being like someone who hung on too long, and it was obvious you were there when you shouldn't have been there anymore. So, I don't think that this dip that you're seeing here is because Hastings is leaving the company's board.
I don't either. I wouldn't buy that. But it did come abruptly.
It did. But he's not the CEO anymore.
Nope.
You've got co-CEOs, Ted Sarandos and Greg Peters, who have been running the show for quite a while now, actually. Ted has been the CEO since, I think, 2020. And I think Greg might have been... No, Greg became co-CEO in 2023. So
I can't wait to explain to my kids. They're not, they don't watch Netflix. They're too young now. But in 5 years, I'm really excited to explain to my kids what Netflix started as and what their big competition was.
Right, they won't understand.
No,
they'll be like, "What? What are discs?"
They mailed you what? Why'd they do that?
I'm just so excited to explain it to them.
So. again, I don't think he's been particularly involved he hasn't been involved in any way, shape, or form in day-to-day operations in quite a while. And I'm sure that strategically he's been, consulted on a number of issues. But I'm willing to bet that if something big comes up, I'm guessing that Ted Sarandis still has Reed Hastings' cell phone number.
True.
And can give him a call.
He serves on a couple other boards. He has other interests.
I think they're going to be able to figure it out. What is interesting to me is that their guidance for the upcoming quarter came in about 6-7% short. And so this is, thank you, Mike, I appreciate you. And so this is the question that I think is out there is, okay, is this representing something that is a problem with entertainment budgets? Is this something where they're finding they have to spend more on content than they expected? What's driving that projected underperformance relative to Wall Street estimates? And is it something that's going to continue? So I don't think it's crazy that you see a company pull back in this fashion when they give that kind of guidance, particularly when you look at how the company is valued. Again, Netflix is not a company that you look at and you say, wow, they're cheap. Their forward PE ratio is 31. Their price to sales ratio is 9.5. This is not a company that is cheap by any means, and it's in a very competitive media marketplace where they've been able to be one of the few companies that really has been successful for the last decade. But ultimately, there is so much competition for eyeballs that if you value that steeply and you start showing some signs of slowing down, yeah, you're going to fall 10% in a day. It doesn't mean Netflix is finished. They've had these before. But, okay, what do you need to do in order to execute better? And maybe this is even just a weird, okay, we had a bad quarter and they bounce back. That stuff happens too.
It's a very mature company now. And, they've talked about other ideas like introducing gaming into their platform and other things that might move the needle.
Podcasts too,
and
sports.
I don't see any of it as having hit. I don't think you can say that anybody is better at creating content than Netflix right now. I'm not willing to say that any other company out there today is better at creating content than what Netflix has for the last 5 years. But I'm sure you could come up with arguments.
Can I make those arguments? This is an interesting jumping off point.
Sure.
If we're talking just breadth of content, I'd agree with you.
Yeah.
Netflix also makes a lot of crap. It's crap that I also enjoy.
Yep.
Every single season of Love is Blind, I gotta watch.
Yeah, I mean, I can make an argument that Apple's content has been more limited and higher quality.
That's where I'm gonna go.
Okay.
I think that if you're looking for, for the 2000s and even I'll say for the 2010s, HBO was that peak TV spot, along with who was that, like Breaking Bad and all that stuff ran on?
AMC.
Yeah, so those two I thought were kind of 1-2, and today HBO's fallen off pretty considerably, though they still do have like some better stuff than people give them credit for.
Sure,
but I think Apple, in terms of like the stuff that like people actually talk about after it comes out, it's been more Apple in the last few years.
Yeah.
Again, the other guys still have some sporadic hits and things like that, but what's the last Netflix show that was a giant hit?
Squid Game.
And that was 6 years ago that the first season came out?
I don't know.
Was that pandemic or was that just after? I can't remember.
The most recent season came out this past year. Yeah.
But it didn't have nearly the hype that the
was
first
like
one
season
did.
4?
My first thought was pivot to theme parks like Disney and Universal, but I just can't imagine myself going to a Squid Game theme park. Doesn't seem like it would have mass appeal.
Yeah, considering the show's about death.
Yeah, I was looking through the top hits too. Like, I don't know that a Wednesday Addams theme park, and they don't own the content to do that. But like, going through the list here, not a ton of them that I think would make a really good in-person experience like those other two.
Stranger Things, they have a play.
Stranger Things was huge. Yeah.
Stranger Things, they got a play.
Yeah. Okay.
And a game.
I could see a Bridgerton.
Yeah.
Area in a theme park.
House of Cards.
hard pass. The Queen's Gambit, you could do
chess.
Yeah. Don't get me wrong, I love chess, but
Welcome
Not in
to
the
our
theme
park.
park.
What do you do with
Yeah.
the Jeffrey Dahmer
Chess.
story?
Sit down and be quiet. We'll be back in a minute.
Like us on Facebook and follow us on Twitter at TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead, and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with. So it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are gaining steam after Iran announced that the Strait of Hormuz is now completely open for commercial traffic. The price of oil tumbling further as a result of that news. Right now, the Dow is up 2% or 978 points. S&P 500 up 1.1% or 83 points higher. NASDAQ up 1 1/3% or 332 points. Russell 2000 is up 1.8%. 10-year Treasury yield down 7 basis points at 4.234%. And oil plunging 12% to trade at $83 a barrel. Netflix shares sinking about 10% after the streaming giant reported guidance that disappointed. But the big news weighing on the stock is that co-founder and chairman Reed Hastings announced he plans to leave the board in June when his term expires. Meanwhile, aluminum producer Alcoa posted lower sales in the first quarter as the conflict in Iran forced the company to reroute millions of tons of refining capacity from the Middle East. Alcoa shares are down by 5%. Elsewhere, Morgan Stanley named Buy Now, Pay Later company Affirm stock a top pick, citing potential for earnings upside. Affirm shares rallying 8%. And TV and video retailer QVC commenced a voluntary Chapter 11 bankruptcy as part of a restructuring agreement with creditors. QVC shares down another 16% today after sinking nearly 70% yesterday. I'm Tucker Silva, and that is Wall Street Watch.
Mike, let's talk a little bit about what we're seeing in the spring housing season, which we're now, I'd say, about 58.5% the way through, in my opinion. Spring housing season starts at the Super Bowl now.
Yep.
Ends Memorial Day.
I will argue that this year it got shifted a little bit, but I suppose if you're trying to define it for every year, then that's how I would do it.
I think the problem is it can't really shift. Like there's only people have like plans. Like kids get out from school, great. They're not going home shopping around 4th of July.
True.
You know, like they just can't. They're not there to do so.
I think around the Northeast you could argue it's till mid-June.
Sure. Either way, most of the stuff is done before then.
Yeah.
So, the spring housing season. What happened? Interest rates went up. People got concerned about war, and so transaction volumes aren't looking great based on the pending data that we have from the last 4 to 6 weeks.
Yeah. If you recall, a few weeks ago, mortgage rates topped 6.6% after being below 6 prior to the war in Iran.
Now, they have come back down, but there still might be changes psychologically where people are like, well, I'm not willing to list right now because of it. You know, it's too late in the season. So pretty much what you have here is this housing season. It's not like it's going to be like terrible. It's just going to probably look a lot like last year, which was still pretty darn sluggish, which looked a lot like the year before, which was pretty darn sluggish, which looked like a lot like the year before, which was, say it with me, Mike.
Sluggish?
Pretty darn sluggish.
Even in places like Florida, though, what I find interesting, so last March you had 177,000 listings.
Yeah.
You're now down to 162 as of March of this year. And
this
so,
is the problem, Michael.
Right. You don't have those gains in those Sun Belt markets, and they're certainly not happening up here.
No.
So you just don't have... I'm interested to hear your take on why you're not seeing the gains still in those Sun Belt markets. Is it just because they weren't getting the prices they wanted and they delisted? Did the volume actually move? And there we are.
Look at the chart that you're looking at.
Yeah.
Which everybody look at Mike's chart.
Yeah.
And Mike, is the point that you are at?
Let me get a peepers on that thing.
Is the point, is the point that you're at for Florida inventory higher or lower than it was pre-pandemic?
It's just about the same, a little bit higher.
It's like a whole line higher. You're at like 160 something right now. What were you pre-pandemic for most of that time?
March of 19, you were.
Don't give me 1 month. Give me like the big flat line there.
You were in like the 140 to 150 range.
So you're
now in the 160s.
So you're 10 to 15% above pre-pandemic inventory. It just can't build much more there. The problem is that most of the rest of the country outside the Southeast and Southwest, I guess that would be the South.
There you go.
Is still below pre-pandemic inventory levels
by a lot,
and not really growing.
Massachusetts is half.
So this is where we stand right now. Is remember, inventory leads sales. You can't sell a house if it's not listed for sale. You can if someone comes in and blows you away with a crazy offer, but generally, listings lead transaction volume. So you've been for the last 3 years now. This will be the 4th year in a row that you end up with transaction volume somewhere around 4 million units on existing home sales for the year. The hope was this year you were going to get to like 4.5 to 4.75, maybe 10 to 15% improvement. Pre-pandemic, you were talking 5.5 million home sales a year. So you were going to get like maybe a third to a halfway there. Where it stands right now, housing, probably still a small net drag on the economy, not because of the existing home sales component. That's going to be in line with last year. But builders are all kinds of spooked because of higher rates, higher commodity prices, and things like that. And so they are not starting construction at the same level they were as last year and not getting permits the same way they were this time last year either. So ultimately, housing this year, maybe a very modest drag on the economy. But it's the question is, how many years can you say this? Hey, we're setting up for as soon as things look good, like housing's ready to rip. There's going to be a time where it's ready. It's probably 27 or 28.
The only hope I was holding out for housing, which just seems unlikely to me now, was that, we saw the mortgage rate impact, and maybe there was just this delay across a large swath of the country that had especially bad weather in January and February. Because I was talking to somebody, actually about their plan to sell their home, and they're like, we were waiting to put a pod in our yard, and we couldn't put it in there until late March to clean out our house, and we eventually want to list it, but we're going to have to delay the listing now because we couldn't do this stuff when our driveway was full of snow and ice for most of January, February, and a good portion of March. And so maybe in some parts of the country there's a delayed set of listings that are going to come up, but that doesn't affect Florida, doesn't touch Texas. It doesn't affect Louisiana listings. We're talking about, parts of the Midwest and Northeast that maybe could see those delayed listings, and I just don't think it's going to be enough to move the needle.
Speaking of Louisiana, do you know what part of Louisiana Bubba from Forrest Gump is from?
Not New Orleans?
Actually, he was not from Louisiana. Take that back. He's from Alabama. What part?
No clue.
Bayou La Battery.
Didn't even know it was a place.
There you go. Now you do. Let's talk a little bit about gas prices. Speaking of Louisiana, surging gas prices have hit these U.S. cities the hardest. Are any of them in Louisiana?
No, they are in places that people drive a whole lot. So they're not saying this is where gas prices have risen the most. They're saying this is where it has the biggest impact on the drivers there. Nashville, Indiana is one of those places where people just drive everywhere they go.
Nashville, Indiana?
Sorry, I'm thinking about Indiana because there's something I wanted to say about that. Nashville, Tennessee. There is a Nashville in Indiana.
Lovely this time of year.
Is there really?
But in Indiana, when you do stupid things like passing laws...
There is a Nashville, Indiana.
Told you. When you do stupid things in places like banning the use of light rail or bus lanes, then guess what? You have to drive everywhere you go, and when gas prices spike, then that happens. Indiana has the only nationwide law banning light rail in their state.
What's the technical definition that separates light rail from heavy rail?
Light rail is a flexible, lower capacity and cheaper system, often operating on surface streets with smaller trains suitable for medium density areas. Heavy rail is high capacity, fully graded
A fully grade, separated, and expensive system designed for rapid transit in high-density areas.
Okay.
So they restricted it primarily for the Indianapolis region back in 2014. I'm guessing because lawmakers are getting their paychecks from a bunch of auto dealers or something like that. And so there's no public transit in some of these cities. So, of course, you have to drive everywhere. And therefore, when gas prices go up, you take a particularly hard hit.
There you go. Let's take a quick break. When we return, let's talk a little bit about some automakers, GM and Ford, with a little bit of news. So we'll discuss them after this.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Well, in about an hour, we got the old Money Matters mailbag that we do every Friday around 11:35. And if you have any questions, just shoot us an email to tfeshow@gmail.com. Once again, the email for the Money Matters mailbag is tfeshow@gmail.com if you have questions for Chuck or Mike. And we'll do that in the next hour.
Tucker was kind enough to forward on a text about light rail. Light rail, think the Green Line in Boston. Heavy rail, think subway and commuter rail. Because remember, the Green Line is not really a subway.
Yep.
It's, kind of that small little thing that's half above and little tiny track and,
By the way, my point was not that I believe that Indianapolis has to have light rail. My point about them passing a stupid law was that the state legislature banned anyone from using light rail or installing light rail in the entire state. That was the piece that I thought was a little bit over the top.
Why is there no medium rail? Or is that the third rail?
It's a great question, Chuck. Yeah.
Let's talk a little bit about the auto industry since we've run our course with our railroad knowledge for the time being. General Motors, headline from the Wall Street Journal, still making cars for the U.S. halfway around the world.
No kidding.
Yeah, they figured out it's still, even with tariffs, it's still cheaper for them to do it. Okay, that's the story.
Yeah.
If they thought it was cheaper to bring the production back to the U.S., they probably would have done it.
Yeah. Meanwhile, Ford CEO, who has been, in my mind, the most outspoken person about Chinese auto manufacturing, Ford CEO is Jim Farley. He does not live in an F-150 down by the river, but he has been very outspoken about the Chinese auto industry basically, both being unfairly subsidized by the government and also well beyond what the U.S. industry seems to be capable of right now. And this seems misunderstood. I was talking to Jim Polito about this the other day because his perception was, who would ever buy a Chinese car? They must be, garbage vehicles. They're going to break down every few miles. And my point was, Jim, I don't actually think that that's the case. The insinuation seems to be they are building very high-quality vehicles at a very low price point in new and interesting areas that customers want. The problem is that, one, I would not trust any of the software that goes into one of these vehicles, and two, that the reason they're able to advance so far in this is because their entire industry is heavily subsidized by the Chinese government.
So I read through this piece. I still don't know what Ford's actually doing. It just says Ford will expand partnerships with Chinese companies outside the U.S. because we want to bring the best vehicles to market wherever it makes sense.
I think it's clear
Is it gonna be
that
like
he
rebranded Chinese vehicles as Fords? Are they going to sell Chinese vehicles through Ford dealers internationally? What's happening?
I don't know what's happening. I know what his end game is to learn something about the Chinese manufacturing process and the technology going into the cars because he thinks that there's something there that could better his own company's manufacturing process, which is just kind of ironic to me because that's how all of these Chinese automakers got ahead in the first place, was by ripping off Ford, Tesla, General Motors, and all these companies that wanted to do business in China in the first place.
Now, Ford does have their Skunk Works that they rolled out last year.
Their what?
Skunk Works.
Like Pepe Le Pew?
No, they've got it's a facility, I forget where it is, but they're trying to develop that $30,000 next generation EV.
Ah, yes. Okay.
You know where Skunk Works originally comes from?
No.
I believe it was Lockheed Martin. But I think it was Lockheed Martin. Back during World War II, they were doing all kinds of, and even after, they were doing all kinds of aerospace research. And the stuff that they were producing there smelled very bad because of a lot of the chemicals being used. And so it was like kind of their top secret, place where they were developing all the cutting edge stuff. And it got known as the Skunk Works because of the smell.
So back to the state of American car manufacturing. Let's pave a path forward here that I hope doesn't occur, but seems to be happening. Europe letting Chinese cars in, destroying their own auto industry. Canada seemingly signing a deal to do the same. Mexico and most of South America seem to be willing to allow their citizens to buy these cars so long as the government gets some portion of tariff revenue off of it and maybe some jobs in manufacturing. That leaves the U.S. auto industry where I don't know who they sell to other than Americans. What do those car companies look like if all they can sell are American cars to Americans?
Right, like you could sell 1 million F-150s a year, but if that's what you're selling, you don't have the scale that gets you to where you want to be.
Like, we can talk about, the fame and excellence of American auto manufacturing all we want, but the CEO of, one of the two most famous auto manufacturers in the country is telling you that he can't compete with Chinese car manufacturers. And if there was a point where you could sell these things in Europe because they blocked the Chinese cars. They're not doing that anymore. Canada doesn't seem to be doing that anymore either. And so it leaves these auto manufacturers, which we do rely upon for a large degree in the event that they need to be repurposed for defense, in a pretty precarious position in my mind.
Some of them we talked last week about how the only vehicle Chrysler sells now is a minivan.
Right.
Like, what do you do with that?
I don't know exactly how that all looks in a few years.
When it comes to leaving assets to your family, simplicity isn't always the best approach. Cushing & Dolan are experts in elder law, and their new guide is called How to Leave Assets to Beneficiaries. Adding children as joint owners on accounts or property doesn't guarantee you can avoid probate, and it may create serious unintended consequences. In this guide, you'll learn why leaving assets to your children may not always be the best plan. The guide also explains how trust can be used to stagger distributions over time, help protect assets from creditors or divorce, and ensure your family receives your inheritance in a way that makes sense for your personal situation. Call 866-848-5699 right now and ask for your free guide, How to Leave Assets to Beneficiaries. That's 866-848-5699. 5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
I want to talk just about this piece from Bloomberg. Billionaire investor warns sports prediction markets harm men. This is from John Arnold, who's made $1 billion trading energy. Is basically saying, look, these prediction markets are hot garbage, and it is causing a lot of men to run into financial problems. This is something that I've been talking about on the show for the last couple of years. And I'll quote here from Bloomberg. Rather than outright ban, Arnold is calling for guardrails and referred to early research showing that sports betting can lead users to sink into debt and face mental health challenges. Exactly what those guardrails would be, again, I think that's kind of an open question. But look, this is something I've talked about for a while. You go talk to any man who's in their 20s, 50% chance they're in gambling debt. Ugh. Like that's not healthy for society.
You can agree.
Let's take a quick break, and when we come back, we got a lot more, including. We got Wall Street Watch. We got the Money Matters mailbag. We got Paul LaMonica from Barron's and a bunch more. Coming up in hour 2.
When it comes to estate planning, many families focus on taxes. But understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide called Building Your Emergency Financial Binder will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return, number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you, and stocks are rallying to new all-time highs. This on the back of a tweet from the Iranian foreign minister that the Strait of Hormuz remains open as negotiated through the ceasefire process. Despite that, you still aren't seeing, meaningful traffic through Hormuz at the moment, but markets are betting that there is going to be a positive outcome probably the next 3 to 6 weeks. And so, again, I think you certainly are getting to the point internationally, at least, where you are starting to see some problems cropping up in terms of shortages, most notably in Asia right now, but also some sporadic items that are popping up across Europe here and there. Nothing significant to this point, but it's starting to show up. And markets are effectively saying, hey, if there's progress so that you can get Hormuz reopened in the near future, yes, you're going to have some shortages that happen for a 2 to 3 month period, but that doesn't matter because you don't price earnings based on the next 2 to 3 months. You price them based on the next 2 to 3 years, and we can get through that. So with that in mind, Dow Jones Industrial Average up 1,036 points, about 2.25%. The S&P 500 up 93 points, about 1.33%. And the Nasdaq Composite up 384 points, about 1.6%. So a broad-based rally happening in equities. On the bond side of things, you've got bonds rising with yields falling, as the 10-year Treasury is now at 4.236%, down 7.3 basis points from yesterday. Dollar index down 0.42% to 97.60. You've got gold up $90.50 an ounce to $48.98. And you've got West Texas Intermediate crude oil down 13.75% to 81.66. AAA national average for gas prices right now, we're looking at 407 and 6/10, so down about 1.5 cents overnight. If we hold with West Texas Intermediate in this range, you are going to end up with gas prices back into that 380, 385 range within the next week or so, and we'll see how things develop from there. Again, this can all change quickly. You could have a comprehensive agreement that gets signed in the next couple weeks where gas prices have further to fall. You could have a continuation of this where maybe oil prices continue to hang out, in the, quite honestly, if Hormuz remains closed, you're going to, not closed, but if traffic remains not going through despite the Iranians' insistence that it's open, you would have oil moving back up into the 90s in pretty short order. And if you have renewed hostilities, you can get back into that 110, 120 range. But at this point, markets are pricing in that the worst is behind us, and that very well may be the case. We'll just see how things go over the next couple weeks here.
Indeed.
Let's talk about this piece from the Financial Times. Wall Street banks start trading derivatives to bet on pain in private credit. Oh, good. We've got credit default swaps back in the news after a 20-year absence.
Boy, oh boy, oh boy. History sure does repeat itself. So, during the lead up to the great financial crisis, investors of all sorts were trying to find ways to bet against the American housing market in one way or another.
Yeah.
That's really what it was. It was like, hey, how do we actually place these bets? There aren't a ton of bonds for us to bet against. We can't short this, that, or the other. So they created this new cool product called a credit default swap, which was effectively betting.
I don't know if they were new at the time.
Yeah,
just on like the
new on the product of what it was betting against was new, which was all of these mortgage backed securities, and so they created this new product on this, much like is happening today. Before this, you could bet against the stock of private credit companies if they existed, but there wasn't this liquidity for the ability to bet against these, and so the question, of course, is will this actually become a very popular investment product as it did during that point in time? Who is taking the other side of that trade, right? Because if banks are selling credit default swaps, they're selling the other part of that bet to somebody else. And does it grow to the point where it could be real problematic for some of the folks buying the product on the other end?
So here's the thing. I know everyone hears the phrase, credit default swap, and immediately they go,
oh, wait, recession again. Yeah.
Guys, here's the thing. And Mike basically spelled it out. In order for this to become an actual problem, the scale and holdings and concentration of these bets against it have to become so big and so problematic that it's not even worth discussing right now. Ultimately, any financial product can be either good or bad for the financial system, depending on who owns it and how much of it they own. Okay? Even the stuff that, I don't particularly like. When we talk about, betting markets, prediction markets. I might think they're really dumb, but if three guys decide to get together and make a bet as to, whether or not a human can grow wings this year, not really going to be a problem for me. It's not affecting people. If 10 million people start betting on,
the second coming of Jesus, which you can currently bet on some of these sites?
Yes.
Yeah.
Problematic. Okay? If you've got everyone and their grandmother betting on sports and just losing that vig to the house every single day, becomes problematic for society.
Yeah.
Ultimately, credit default swaps are like anything else. Hey, if they're used responsibly, they're fine. Like, all the people who are like, well, you shouldn't ever have any debt. Hey, guess what? I got a mortgage. Okay? I can pay my mortgage. I hope I'll still be able to, and I hope there's no change in my employment situation that would cause that to become a problem. But there are ways to use debt responsibly, just like there are ways to use debt irresponsibly. Likewise, there are ways to use credit default swaps responsibly, and there's ways to use them irresponsibly.
There are always echoes of the past and this new financial product that the real innovators on Wall Street have put out there does bear resemblance to what we saw during 2008. The stuff that doesn't bear resemblance, I mean, how many people in the entire world were talking about the real concerns in the U.S. housing market in the lead up to that point in time compared to the number of people that are writing about real problems in private credit? The sense that I have is that people are far more realistic about the risks in private credit today than they were about the state of the U.S. housing market and mortgage-backed securities back in 2006 and 2007.
It's hard.
It is hard
to tell
value.
For two reasons. The first is hindsight's 20/20.
Sure.
Like, you go back and you look and you're like, oh, these are the people who were warning about it. I don't know. I read plenty of guys now that are warning about it.
Maybe that's my point, is that far more people seem to be warning about it today than I think people were warning about the housing bubble in 2005.
So here's the other reason why I have a problem with like trying to make sense out of that.
The internet was different. Everything was different back then, but
information flows were different.
Yep.
And on top of that, quite honestly, at that time, I was a kid.
Yeah.
Like, I don't know what was being said in the banking community during that time. I was having a couple beers, quite honestly. Maybe a couple more if, it was a Friday or something like that. So, I can't make heads or tails of, was the environment different then? Because I wasn't even in the environment then. And I'm humble enough to be able to be like, that's a problem, like, with me trying to evaluate that. Is it going to become a problem or not? Don't know, but here, as I've said before, if it doesn't by the end of next year, then I think you can put a lot of the fears to bed. The timeline for this to become a problem is the next 20 months now. And if it doesn't by then, it's not really private credit that's going to cause the problems. It's going to be something else that, it might tangentially spill over or something. But, we'll see how things go. Let's take a quick break. When we come back, we've got trivia, and then we're going to talk about two expensive mistakes that most retirees make and how to avoid them.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network. When it comes to leaving assets to your family, simplicity isn't always the best approach. Cushing & Dolan are experts in elder law, and their new guide is called How to Leave Assets to Beneficiaries. Adding children as joint owners on accounts or property doesn't guarantee you can avoid probate. It may create serious unintended consequences. In this guide, you'll learn why leaving assets to your children may not always be the best plan. The guide also explains how trusts can be used to stagger distributions over time, help protect assets from creditors or divorce, and ensure your family receives your inheritance in a way that makes sense for your personal situation. Call 866-848-5699 right now and ask for your free guide, How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide, called Building Your Emergency Financial Binder, will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange, and on this day in 2011, Game of Thrones premiered on HBO. Game of Thrones won 59 Primetime Emmy Awards during its run. However, only one actor won an Emmy for their performance on the show. So our trivia question today, which actor was the only one to win an Emmy Award for their performance on Game of Thrones? Once again, which actor was the only one to win an Emmy Award for their performance on Game of Thrones? Be the third person today to text us at 617-362-1385 with the correct answer, along with keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
We got a piece here in Market Watch today. It's titled "Two Expensive Mistakes Most Retirees Make and How to Avoid Them." Number 1, microwaving fish.
Don't do it.
Number 2, eating microwaved fish.
So I don't even know if these are the top two most expensive moves that retirees make. So one, they claim Social Security too early. I think there's plenty of evidence that on average people do claim Social Security earlier than they maybe should. The second one, they spend less than they can afford. How would that be your most expensive mistake in retirement?
Well, it's expensive in that you are voluntarily forgoing money that you could have spent, and so as a result, you've made your life more expensive through income that you didn't take. It's convoluted logic, but I can see how you get there.
Is this like my life is so rich because I'm happy conversation, or is this a legitimately expensive thing?
No, it's like I made my life worse than it could be because I didn't spend money. You made yourself psychologically poor at the cost of staying financially rich.
What would you say are the actual most common mistakes retirees make?
So I do actually think that not spending enough money is one that I see.
Okay.
Like for people who have enough saved,
yep.
I see for every person I see that spends way too much of their retirement, I see 4 or 5 where they're like, I can't spend this because I'm nervous about running out of money. So I do think people prevent themselves from enjoying retirement if they're capable of doing so.
Yeah, I think plenty of people work longer than they have to because they have no
Similar
idea.
thing.
Yeah.
It's just it expresses itself in a different format.
The Social Security decision, I'll admit, that is a big one. I think people make irrational decisions when it comes to things like Social Security and pensions. I don't think they do the math. I don't think they care about the math.
Yep.
And they just want the peace of mind that they can get from a program like this. And, on average, that might lead to some financial mistakes.
One that I do see for people who are able or trying to retire early, they don't properly budget for health care before they hit Medicare age. That is one that is very expensive.
Oftentimes they don't budget for it after the fact either because they fail to understand how Medicare works and IRMA prices break in. I think most people are now aware of Roth conversion strategies and, my big bad RMD, but they don't really understand what that RMD is going to do to their future scenario until they suddenly get that nice little letter from Medicare saying, oh, by the way, your premiums are now going to be an extra $200 a month each. Yeah. So there are a lot of these questions that we obviously get from folks at the Armstrong Advisory Group when it comes to retirement. And as such, wanted to make everybody aware, if you're not already, about an event that we are hosting from the Armstrong Advisory Group this month. It's on April 30th. It's up in Woburn, Massachusetts, and if you happen to be in the area, would love for you to join. It's a retirement planning seminar. We're going to be talking specifically Social Security and Medicare essentials. Susan Powers and Effie Vasulis are going to be hosting it. Effie is a Medicare expert that is an enrolled agent and speaks about Medicare for her entire career. Susan Powers, an advisor with the Armstrong Advisory Group. I'll be there, hosting the event. It's at the Crown Plaza in Woburn. It's free to attend. It's at 5 p.m. on April 30th. So just coming up here in a couple of weeks. Space is limited, so you do need to register ahead of time. 5 p.m. Crown Plaza. Is April 30th? I think that's Thursday, April 30th. Yeah, Thursday, April 30th at 5 p.m. It's going to be a really great series of topics. I know a lot of people have questions about these two things. It's easily the two most common questions we get questions about. So register online at armstrongadvisory.com/events. You can also call our office at 800-393-4001 if you're having trouble. But easiest way to grab more information about our free event on Social Security and Medicare, go to armstrongadvisory.com/events.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, if you had to retire overseas, I say had to, like it's, a bad thing.
Yeah. They are talking about kicking me out.
If you had to pick one place to retire to overseas, where would you pick and why? If money were no object.
Take your time, too.
Yeah, I am.
It's not like it's live radio or anything.
Somewhere in Southern Europe, access to good quality health care, generally good weather and history all appeal to me.
Yep. Tucker, what about you?
There are parts of Latin America that could do the trick, too. But the healthcare thing is something that I would be less certain about.
I want to say Italy. I've never been to Italy, but I'm quarter Italian, so
quarter of a percent. 99.75% Irish, but that 1/4% of Italian.
Shut up over there.
My grandmother's mother's father's mother.
I'm just afraid I would put on 30 pounds in a week.
Well, you would. That's why the healthcare is important.
Yeah. So maybe I don't know, London or maybe some place warm. The possibilities are endless. I don't know, guys. I don't know.
They are endless.
The moon.
I would
definitely not the moon.
Overseas.
Yeah, there is the Sea of Tranquility up there. So, in any case, I'm in the same boat, but there's this piece from Barron's, dreaming of that Tuscan villa like the three of us are. Here are some, things that you need to know before retiring abroad.
They can't cover it in 3 pages.
No. It's number one, even just figuring out, currencies and things like that, figuring out your health insurance situation.
Where can I get a visa? How much is it going to cost me? How am I able to continue to manage assets in dollars?
How do my taxes work in terms of any money earned there versus what I'm paying to the U.S.?
Do I give up on my Medicare, knowing that if I ever come back to the U.S., I'm going to face huge penalties if I have to re-enroll at that point in time? It is immensely complicated.
It's a big decision.
It's immensely complicated. By the way, how do I even handle my investments? Because a lot of big firms like Fidelity and Schwab will place restrictions if you are living abroad on what they will allow you to do and what they won't allow you to do and which country you're living in. Yeah. So it is immensely complicated, and do more than just read a Barron's article, I guess would be my point.
Yeah, talk to someone who specializes in helping retirees living abroad. Let's take a quick break. When we come back, we've got the Trivia Answer, Wall Street Watch, and the Money Matters mailbag.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint owner on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Building Your Emergency Financial Binder. Mike, when we talk about the type of information that should be in there, what kinds of things should people be including so that a loved one or family member whatever can help to keep their finances in order.
Yeah, I think, on the financial side, it's what do I have and where is it?
And how do I get access to it?
Right, and so that can mean getting access to online passwords and things along those lines, but obviously how you share this stuff is extremely sensitive given the threat to being breached down the road. And so mainly it is, though, what is the snapshot of my financial, health, and legal life, and how do I format it in a way that people can actually interpret it?
And I think another piece there is that is also always changing. How do I let people know what changes I've made and when I've made updates to it, because I might not have the same accounts that I used to.
Right, and the guy does lay that out of, hey, how do I document changes in here, because you might not always have that old account at said financial institution. It could change, it could shift, you might retire, and keeping this thing up to date is critical. Obviously, the more stuff there is out there, the more complicated this becomes, and so as much of it as you can check off the list while you're still around and able to explain it is extremely helpful.
The guide, again, is titled Building Your Emergency Financial Binder, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number, again, is 800-393-4001, or visit armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are continuing to rally after Iran announced that the Strait of Hormuz is now completely open for commercial traffic, sending oil prices lower. However, President Trump said the U.S. naval blockade on Iranian ports would remain in full force. Right now, the Dow up by 2%, S&P 500 up 1.3%, NASDAQ up 1.6%, Russell 2000 up over 2% higher, 10-year Treasury yield down 7 basis points at 4.238%, and oil plunging 12% to trade at $83 a barrel. Netflix shares are sinking nearly 10% after the streaming giant reported guidance that disappointed investors, but the big news weighing on the stock is that co-founder and chairman Reed Hastings announced he plans to leave the board in June when his term expires. And aluminum producer Alcoa posted lower sales in the first quarter as the conflict in Iran forced the company to reroute millions of tons of refining capacity from the Middle East. Alcoa shares are down by 7%. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question. Which actor was the only one to win an Emmy Award for their performance on Game of Thrones? Well, that would be Peter Dinklage. And Rita from Shrewsbury, Mass is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Rita. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
The mail's here. Here's the mail that never fails. It makes me want to wag my tail. When it comes, I want a whale. Mail!
You've got questions, we've got answers. It's time for the Money Matters Mailbag. We're tackling your calls and emails on everything from economic policy to global markets and everything in between. Leave us a voicemail at 339-399-4333 and you might hear it on the show. You can also email your question to tfeshow@gmail.com. Now, it's time for the Money Matters Mailbag.
That's right. It is time for the Money Matters Mailbag here on the Financial Exchange. And one of the ongoing themes for this week's show, and we haven't heard Chuck's take on this, so let's get Chuck's take on this. Chuck, who had it harder, millennials or boomers?
Millennials.
All right, hit me, Chuck.
So, let's first talk about all of the good things that the boomers got to experience, including just the greatest economic expansion in human history. They then got to also, beyond that, participate on the right side of the housing bubble. Okay. They also, even if we want to continue going further, made things deliberately harder for the millennials afterwards. Specifically, things that they've done. The millennials get blamed for a lot of stuff that the boomers actually did. Participation trophies, we didn't give them to ourselves. Avocado toast, we didn't make it for ourselves. Other things that we didn't do. We weren't the ones who said, hey, when we're passing the Affordable Care Act, let's make it so that the young people pay more and the older people pay less in order to make the cost cheaper for boomers. So I'm going to go with millennials in this case because I like it and it makes me feel good. Yeah. And furthermore, even if we look at some of the non-financial things, like we kind of go outside of that.
Like the draft?
Yes. So I was actually going to go in this direction.
Okay.
I know that boomers will point to, Vietnam War and everything, and I'll simply point to global war on terror, which, if you talk to anyone who served in the last 20 years, was an awfully hard time for them, too. So I think you can make that a push. I'm not going to argue, who had the worst war. That's just not a conversation that's worth having.
Here's my counterpoint.
Yes.
40% of boomers served in the military, 4% of millennials did.
That's fair. I think that's a fair point. So I think ultimately boomers had huge advantages in housing cost, huge advantages in cost of education. They also had far more job market loyalty than millennials have experienced. And there was far less competition from overseas outsourcing as well.
I'll counter that by age 35, according to most studies, millennials have a higher inflation-adjusted net worth than boomers did at the time.
Yes, I understand.
Okay.
That's because we've been able to overcome a lot. We're very resourceful.
Just tougher.
Yeah, we're just tougher than the boomers.
Chuck is just throwing haymakers today. All right.
Listen, if you can't go in on boomers every now and then, they go in on us. We go in on them. Okay. Ultimately, here's the thing. The baby boomers are our parents. We love them. There's no way. You can't have one without the other. It's yin and yang, okay? Ultimately, every generation goes through hard things. Every generation has its positives. I don't think anyone's actually had it tougher than anyone else. I think there are ups and downs with all of them.
Okay.
But we definitely had it tougher.
All right. Well, there you go. On to the next question for the Money Matters mailbag. Let's see here. Do you have any tips for someone who may need to retire earlier than expected?
Yeah, plenty. I think the biggest one would be map out your stuff because it depends on how much earlier than expected. If you're talking pre-59 and a half, then there is a ton of work that you have to do because those retirement accounts, really tough to access before 59 and a half without getting absolutely whacked with penalties. There are some ways around it, but it depends on what types you have. So just play an example here. If you have an IRA and you retire before 59 and a half, you cannot access that money without using what's called a 72T distribution or without paying a 10% penalty. If you have a 401k, however, and quit that job or get laid off from that job after the age of 55, you can touch that one employer's 401k compared to your IRA. There are these nuanced rules that go into this. If you're talking about retiring early, the biggest problem for you is going to be health insurance. It's going to be the most costly line item you have to figure out. Depending on how early we're talking, it could be anywhere from a year to a decade that you have to cover those costs outside of paying for Medicare. And for most people, that makes it prohibitively expensive to retire. So the big thing is you probably need to save a lot more than the average person if you're going to retire early. And where you save that money becomes incredibly important depending on what age you're talking about. Anything else to add, Chuck?
No, I think you got it.
Okay.
All right, let's get to one more question here. We probably only have time for one more. This one, I sold my house and have enough money to fully pay my car off while still having a good amount of savings left. Should I invest or pay off my car? The interest rate is between 6 and 7% and have about $17,000 left to pay on it.
The answer on this one depends on your risk tolerance and time horizon. What I mean by this is, hey, if you have the tolerance for a lot of risk and ups and downs in markets and you don't need that money for the next 20 years, you're probably net going to end up better off by investing that, simply because if you look at long-term returns on equities, they tend to be just north of the rate that you noted. Not all the time, but again, you can make, most of the time it works out in that fashion.
Yeah, we could run the numbers. I don't have them off the top of my head, but I'd be curious to know what percentage of the time equity markets on a 10-year basis do less than 7%. It's probably a lot.
It's still probably somewhere in the ballpark of like 20 to 30% of the time.
Yeah.
If you are someone who needs that money in a few years and you don't like any investment risk and you could earn way less than that, then you're probably better off paying that car off. The other thing that I will point out is it doesn't have to be all or nothing. It could also be something where you say, hey, let me take half of it and put it towards the car so it's paid off sooner, and let me take half of it and invest it because I want to grow it.
My personal threshold, if I have debt over 4 to 5% interest, I'm paying off that debt, and Ramsey would poo-poo us for even asking the question. He would tell you, pay off that car immediately. Why did you even have a car loan in the first place? And then he would yell at you for a little bit.
Call you an idiot, probably.
Yeah, but that doesn't make him right.
Does not. He has a lot of views that I completely disagree with.
It's again, I think there are responsible ways to use debt and there are irresponsible ones, especially given where car loans are these days. One at 6 or 7 is actually relatively affordable by current standards.
Yep.
Let's take a quick break now. When we come back, Paul LaMonica from Barron's joins us talking SpaceX next.
Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Get real-time financial insight as news breaks. The Financial Exchange is live on X. Watch the show and follow us for the most up-to-date business news you need to know. This is the Financial Exchange.
Ladies and gentlemen, the weekend.
The Financial Exchange is a proud partner of the DAV of Massachusetts. Register today for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Paul LaMonica from Barron's joins us now, here to talk a little bit about SpaceX. Paul, how you doing today?
I'm good, thanks. How you guys doing? It's a nice day of a lot of green on the screen out there.
A lot of green, a lot of green. Paul, you ever been to space?
I have not been to space. Probably not in my future. But you never know.
Would you go to space if offered the opportunity? Tucker
honestly,
would not, I would.
Yeah, I don't know if I would, to be honest.
Mm-hmm.
I think there are things on Earth I'd rather do.
What's the scariest part of space to you? Is it re-entry? Is it the launch?
Isn't it that in space no one can hear you scream? Or
that
I've
is
seen
true.
Way too many movies.
Let's talk a little bit about
aliens. Yes.
Yeah, let's talk a little bit about SpaceX then. So they filed for their IPO. The expectation last time I heard was before the end of June. Is that still the timeline that we're hearing?
That seems to be what the chatter is. I mean, they filed confidentially, so we're still waiting for the formal public filing that people can see that will lay out more of the financials, and then obviously they'll go on a roadshow and all of that pre-IPO rigmarole before they finally start trading. But all indications are that it should be this summer.
What are we seeing elsewhere in the IPO market in terms of companies that have gone public this year? What are they suggesting about the overall environment for new listings?
Yeah, I think what's interesting is that so far, and I think probably it's because of the market volatility that we have had due to the war in Iran and what's happened with oil prices and concerns about the economy as a result, you've had fewer companies go public by a pretty wide margin than the same time a year ago, but they have raised a lot more in proceeds, about 40% or so. So fewer IPOs, but they're bigger. So I think that suggests that companies that have a good story to tell that are a little bit later stage and more mature, which obviously SpaceX fits that category, are the ones that are able to go public. So just look at this week, for example, Madison Air, a company in the ventilation business that's done a lot of roll-ups. I think a lot of people know them because of the Big Ass Fans brand that they own. They went public yesterday, and the stock did reasonably well, up about 18% at last check. It's up slightly again today. So companies, it doesn't have to be about the AI trade. I think investors are looking for large companies that have significant revenue and either earnings or the potential in the near term for earnings, and they are probably still able to go out even in a volatile market. SpaceX, of course, I think there's going to be a lot of clamoring for that, and then attention will turn to OpenAI and Anthropic when they both file later this year.
When you look at a company like SpaceX, because of its size and its kind of hodgepodge of assets, do we have any sense as to how the heck this thing ends up getting valued?
It's a great question. I mean, if you're looking at the talk of 1.75 to 2 trillion for the company, you're looking at triple-digit trailing multiples for both revenue and EBITDA. We don't know exactly, though, what the 2026 estimates are going to be from Wall Street, so maybe the stock is a little bit more of a bargain. But do you just throw out conventional metrics and bet on the fact that more so than Tesla, this is maybe not a monopoly, but a much clearer leader in a highly profitable business? I think there are concerns about XAI getting rolled into it, and maybe that lowers the profitability and the margins a little. But let's be honest, OpenAI and Anthropic, ChatGPT and Claude's parents respectively, they're probably not going to show any profitability when they finally file their S1s, but the revenue growth is so dramatic that I think investors expect that those companies will eventually turn a profit, and that by the same token, XAI will eventually add to SpaceX's earnings as well.
Very good. And Paul, we appreciate you joining us today, and I hope you have a fantastic weekend and are able to avoid space.
I plan on avoiding space, and if you decide to go, I hope you don't run into any xenomorphs.
I'll send pictures. Don't you worry.
Yes, thank you.
Paul LaMonica from Barron's talking about SpaceX here. What do we got, Mike? Anything we haven't covered today?
Does Space Mountain count? I'm going there next week.
No. Space Mountain is on Earth.
I will say that we called it regarding crypto years ago. A 233-year-old Wall Street institution going all in on crypto. The New York Stock Exchange, which I do feel like the Wall Street Journal does this story some justice. Centralized, gated, and closed on weekends, the New York Stock Exchange is the ultimate architectural symbol of everything Bitcoin was created to disrupt. And yet the 233-year-old titan of Wall Street has quietly positioned itself as an unlikely crypto powerhouse. We've been talking about this, Chuck, now for 6 or 7 years. I don't know who is going to make money on crypto, where it's going to go next, but it seems to me that the financial institutions that crypto was attempting to disrupt in the first place are well prepared to take advantage of it and make a boatload of money on it, whether it goes up, down, or sideways. Schwab just rolled out something new on their end. Fidelity has been pushing hard on this for years, and I don't think it is going to be anywhere near the disruptor that the creators had in mind.
Yeah, look, ultimately we've said that the most likely outcome is it just becomes another number in the casino, which is really disappointing for those who wanted something that was more focused on privacy, autonomy, and distributed networks that can't be co-opted. Unfortunately, when Wall Street sees someone else making money, generally they say, "Hey, stop that. That's our job." And they're pretty good at doing that. They know the incentive structure to get people to play by their rules. It's just how it tends to work. Stocks remain broadly positive as we head towards the top of the hour. Dow is up 1,064 points, S&P's up 93, NASDAQ is up 375. Hope you all have a great weekend, and good news, we'll see you back here on Monday for a whole another week. Big earnings week next week.